Hello everyone, here are the latest market news on September 10, 2020. American stock indices rose 1.6 to 2.7%. The US stock market closed with solid gains, with tech stocks posting their best one-day gains in about 4 months, recouping some significant losses incurred the previous day. Meanwhile, the tech sector rose 3.4% on Wednesday, the fastest one-day gain since April 29. Apple Inc. stock quote increased by 4% after falling by 6.7% the day before. Tesla Inc. shares rose in price by 10.2%. On Tuesday, they lost 21.1% in price and moved to the second bearish trend this year. United Airlines Holdings Inc. fell in price by 3.3%. By the close of trading, the Dow Jones Industrial Average rose by 439.58 points, 1.60%, up to 27,940.47 points. Standard & Poor's 500 gained 67.12 points, 2.01%, and amounted to 3,398.96 points. The Nasdaq Composite rose by 293.87 points, 2.71%, up to 11,141.56 points. Chinese banks in the MSCI China Index fell to 14%. The capitalization of Chinese banks whose shares are traded in Hong Kong have fallen by $184 billion since the beginning of 2020. Their share in the MSCI China Index declined to 14%, close to the minimum recorded in 2005. The fall in the market value of financial institutions this year has led to declining profits of Chinese banks, low interest rates, and the threat of an increase in bad debt. The 4 large state-owned banks of the PRC, Industrial and Commercial Bank of China (ICBC), Agriculture Bank of China and China Construction Bank Corporation, announced a decrease in profits by at least 10% in the first half of the year. These banks' share prices are currently half of their book value or less, and these are record lows. US accused of delaying global tax rules discussion. On Wednesday, France blamed the United States of seeking to derail negotiations to resume cross-border taxation in the digital age and urged Europe to prepare a European Union tax if negotiations fail. Nearly 140 countries are negotiating for the first major rewriting of international tax rules in a generation to accommodate the growth of large companies like Google and Amazon. Washington called for a pause in the negotiations earlier this year after proposing that any deal would include a voluntary consent mechanism for American companies and raise doubts about the tax. It is clear that the United States doesn't want a digital tax transaction in the OECD. Thus, they create obstacles that prevent us from reaching an agreement even if the technical work has already been completed, French Finance Minister Bruno Le Maire told to reporters. European Union calls tech giants to do more against fake news. The European Commission said on Thursday that 2 years after the adoption of a self-regulatory code to combat misinformation, Facebook, Alphabet, Google, Twitter, and other technology competitors must work harder to be more effective. Fake news related to COVID-19 has intensified calls for social media to tackle the problem more actively. Companies including Mozilla and advertising industry trade organizations signed on to the code in 2018 to prevent stricter regulation. Subsequently, Microsoft and TikTok joined the group. However, the Commission said there were several shortcomings in the code after evaluating the first year of its operation. By the end of the year, the Commission is also expected to propose new rules called the Digital Services Act, which will make social media more accountable for content on their platforms.